Hi there, you're watching Your Trades with me, Shreyanshi Singh and Snehisha. And over the next half an hour, we'll get you an update on what the day was like in trade today. And let's get started with looking at just that. Looks like the market was spinning with the color I'm wearing, Snehi, because it's finally some good news, some respite coming in for the market, because throughout the course of this week, largely we just had the absence of good news being the real good news. But now you have a sea of green across sectors that we saw coming in today. Now, in terms of the top sectoral gainers, of course, you did have a whole host of these. And in terms of the Nifty as well, managed to shut shop above that 22,300 level. Metal, PSE, Media, PSU Bank, Energy were your gainers exactly in that order as well. And even the broader indices, they were the ones that outperformed the benchmark. So that's largely the kind of setup that you had coming in as far as the market was concerned. But when you take a look at a whole host of those gainers, you did have quite some gainers coming in from the auto pack as well. So I'm talking about Eicher Motors, Tata Motors, Tech Mahindra, M&M, all of those counters up anywhere between 3.5% to 4.5%. So that's the kind of uptick that you've seen on some of those counters. And even IT was doing quite well. HCL Tech holding up quite well. Coforge is the one that was soaring on the back of that stock split. So that largely the kind of setup that you saw coming in. Of course, there was a whole host of updates other than the markets as well. You did have Trump's commentary coming in the morning with the joint session of the Congress, and that is something that we're looking at as well, Snehi.
Absolutely, lots has happened in today's trading session, and while global markets have been supportive of the moves that they have seen today, that's panned out for us as well today. Even despite Trump singling out India in his comments and saying that we charge more than 100% tariff and the reciprocal tariffs will be kicking in soon, our markets have held on much better than we expected. Because remember, yesterday we logged in the 10th consecutive day of Nifty's fall. It was a record. We've not fallen for 10 consecutive days ever since Nifty's inception. So it goes way back, and if today it would have been 11th day of fall, it would have been a new benchmark by itself. But luckily that has not happened, and today we have reversed some of the losses, only a fractional part of the losses that we've seen over the last couple of months, because the markets have been on a mayhem recently. But nonetheless, we have ended above the 22,300 mark. Remember, we were very close to touching the 22,400 mark. In fact, the day's highest point, let me get you the exact number, was 22,395. So we were 5 points away from the 400 mark. Nonetheless, we're not complaining. It's been a 1.1% uptick coming in on the Nifty today. So that's looking good. A couple of other buzzers other than Coforge, you had Gensol Engineering. Now trouble continues for that stock. That stock was locked in 10% lower circuit in today's trading session because you had Care Ratings that has downgraded the stock. Remember, yesterday it was ICRA, today Care Ratings that has downgraded the stock. It's a double whammy coming in for Gensol Engineering, locked lower in 10% lower circuit today. JP Morgan was bullish on M&M Financial. On the back of that, the stock has done very well. UBS has also double upgraded M&M. So brokerage action has also kept a lot of stocks afloat in today's trading session. NBFCs, particularly Bajaj Finance, was in focus today on the back of the media reports that NBFCs have RBI has likely curbed any extension on new credit lines and renewals by NBFCs. On the back of that, Bajaj Finance was lower by 3.5% almost. And of course, we have to talk about the big news that was kicking in today in the market. The impact was seen by the market today, although the news came yesterday in the evening that NSE has revised its expiry days for weekly contracts to Monday instead of Thursday. Remember, Sensex expires on Tuesday, which means now NSE will come before the BSE expiry. On the back of that, the BSE stock was lower by 3.5% in today's trading session. So largely that is what the market setup has been like today. Overall, it's been a very good trading day. No complaints so far from the day. But let's understand a little bit more about if this was only a dead cat bounce coming in, or can we see this continuing going ahead as well. And to discuss just that, let's welcome on board Amar Singh, the Senior Vice President at Angel One. Amar, thanks so much for taking the time out and speaking to us on your trades. Help us understand the kind of move we've seen today. Do you believe that we have bottomed out and the kind of recovery we've seen today is something that is sustainable going into the future as well?
Yeah, I would say definitely it's a good day, nothing to complain about the way the markets have bounced back. And this was on expected lines because technically, if you're looking at somewhere around 21,900, 22,000, that was acting as a very strong support. And if you look at across the multi-cap, be the large cap, mid-cap, small cap, the stocks were significantly beaten down, anywhere between 20% to 40, 50%, 60% also in some cases. So, and all the negative news flows which are there, they're more or less discounted. The markets have already discounted them. So there's nothing of a fresh trigger. And the Donald Trump tariff fears, definitely that would continue to play on the markets. So we'll have to see how that actually plays out, because that could be a spoiled sport if were one to put it. Having said that, the way the markets have pulled back today, if I look at the benchmark index, most of the constituents have closed in green and quite strong there. In terms of the advanced decline, that also has been significant. But I would say it's too early to say right now that we formed a bottom. But yes, if the bottom that was made yesterday, if the bottom holds, then we could say, and Nifty for that consistently needs to sustain above the 23,400, 23,600 zone. That's going to act as a very important zone. 23,400 to 600 is something that we should definitely keep a close watch on. If that is breached, then we could say that we are close to forming a bottom, because most of the negative news flows have been factored in. But another point that we need to also bear in mind is that FII outflows, that FII selling needs to subside. Still, we are seeing significant selling happening there. So that is no doubt a cause of concern. So so these are two things that we should look at. Is that whether FII flow is declining, and secondly, is Nifty able to sustain over the 23,400 to 600 zone? And lastly, I would like to add here is that one good thing which has happened is that despite the market correction, India VIX really hasn't, I would say, rallied. So it's anywhere between 13, 14. So the market correction has been there, and this has been really interesting. That the way the markets have cracked, some days have been really wild in terms of sell-offs. But despite that, India VIX continues to trade at 13, 14. So somewhere or the other, markets are expecting or anticipating that we could be close to a bottom. But I wouldn't stick my neck out and say that we formed a bottom yet, because on the intermediate term trend, I've been saying this for many months now, that intermediate term trend still continues to be quite negative for the indices. So that tells me that higher levels would be sold into, and we could witness some consolidation before we witness some sort of solid and sustainable upside.
All right, then can't say that we found a bottom, at least when it comes to the markets. Amar, but tell us, where are you seeing value emerge, both on a sectoral basis and as far as your stock recommendations are concerned?
I would say if we look at sectors, so definitely one of the sectors that looks promising is the banking space. In that, the PSU, SBI is one stock definitely can be looked at. Then amongst the private space, you have Kotak Mahindra Bank from the large caps. That's one stock one can definitely keep a close watch on. Auto stocks are also likely to do well, and two-wheelers I would definitely like to say that could perform well. So that's one sector. And apart from that, pharma is the other sector which one can keep a close watch on. Now coming to the stocks which I'll be talking about. One is Engineers India. This is one stock we've seen almost a 50% correction from almost 300 levels. Currently, it's around 158. It has been on a relentless selling, no doubt. But for the last couple of days, we've seen some sort of bottom formation, and technically that's also visible on the chart. So this is one stock one can keep a close watch on. So buying around the current levels or towards 156 with a stop loss below the recent low. So 147 with the stop loss. And on the upside, the target is around 174. And the second stock to look at is from the metal space, that is Hind Copper. So this is again one stock we've seen almost a 50% erosion in the value of the stock from almost 400 levels. If I look at its all-time high was around 415, 16. Currently, it's around 217. We've seen the stock pull back on significant volumes over the last few trading sessions. So there is this likelihood of the stock rallying towards 235, 236 from a short-term perspective with a stop loss of 203. One caveat I'd definitely like to add is that if I look at the major indices or I look at the patterns also on these stocks, they clearly tell me that higher levels, the stocks or the indices will find it extremely difficult to sustain, and higher levels will be sold into. So that's one view that one should definitely carry.
Coming in, Amar, so Hind Copper and Engineers India looking good. On that note, we'll let you go. Thanks so much for joining us. But as we slip into a short break, here are the word coming in from Sandeep Tandon, the CIO at Quant Mutual Fund. He continues to believe in the India story and also believes that the valuations have become attractive once again. Let's go across and listen in, and we'll see you on the other side of this short break.
So I think, yes, valuations have again been attractive. And if I have to look at India from a longer term perspective, India is one of the fastest growing economy in the world. And I'm not looking for just next 6 months perspective. If I look at for next few decades perspective, I think it's a great opportunity. And every forum, when you interact with the bureaucrats or listen to the policymakers, I think somewhere we expect, nobody has quantified or put in a timeline. This is what they're going to do, whether it's state government also when you interact. You get a fairly good perspective. They are committed. I think it's a question of time. Budget has also endorsed up to that extent. A lot of people have given up, but I think a lot of stuff is happening, and I think we have to look at in a collective manner. Let's look at stock-specific approach, and maybe 2025 will be December 2025 will be far better than what we are seeing currently.
Welcome back. Thank you so much for staying tuned in. Well, time now to take a look at the derivatives diary, then take a look at how the derivatives roundup then is shaping up. On your screens, of course, you can see that for the index futures trends for the Nifty, you do have short covering that was being observed. For the bank Nifty also, short covering is what you saw coming in. As far as the India VIX is concerned, let's try and pull that up. 13.7 is the level that you saw coming in, as you can see on your screens as well. For India VIX, in terms of active calls, then for 6 March expiry, you do have call buying that was observed at 22,400 and 22,500. So those are the levels to keep in mind as far as active calls are concerned. And for active put levels, you have put writing at 22,300 and 22,200. In terms of a support level, then you have 22,200 that formed a key support level as well. So that largely is how the derivatives roundup is shaping up like, Snehi.
Okay, so that's what the derivative world is looking like. That's all the action in the F&O space today. But let's talk about a stock that was up in a way in today's trading session on the back of multiple news flows. That's Coforge today. The shares were trading higher. We've closed with gains of about 8.5% on Coforge, and this is following 2 acquisitions, signing a $1.6 billion deal, a 1:5 stock split, lots of reasons like I mentioned. Ansh is joining us with the details of all of those and to help us understand why Coforge was zooming in today's trade. Ansh.
Well, there are many key reasons why we are seeing strong buying in the stock. Starting with stock split, company has approved stock split dividing one share of 10 rupees face value into 5 shares of 2 each. Now this move aims to improve the liquidity, which makes the stock more accessible to investors. Apart from this, they are getting into many collaborations. For example, the company has strengthened its 13-year partnership with Sabre, a leading tech provider for travel industry. Now this deal is valued at $1.5 billion, which focuses on accelerating product innovation and delivery. Apart from this, we are seeing that company is getting into acquisitions as well. One of the subsidiary of the company is set to acquire Rhythmos for an upfront cost of $30 million. Apart from this, there's another subsidiary of the company, which is Coforge Tech Australia, is set to acquire TM Lab Pty Limited for an upfront cost of a 20 million Australian dollar. Now here the focus would be on digital transformation and engineering services. On the back of which we are seeing that there are many brokerage firms who are getting bullish on the stock as well. Kotak Institutional Equity has upgraded to buy with a target price of 9,000. Jefferies has given a buy call and they have raised their target to 10,350, whereas Morgan Stanley has set a target at 11,500. So this is the reason why the stock is trading with huge gains today.
Alright, then that was Coforge that was buzzing away in trade. Now let's also go across to Ravinder, who's standing by with the entire list of other counters that were also buzzing.
KC International is in focus, where KC International, a global manufacturer, EPC major and RPG group company, has announced today that it has received the tax refund of rupees 177 crore from Income Tax Department. Because of this, we have seen a sharp uptick in the stock. Moving to next, Angel One were also in focus, where Angel One has announced the joining of Ambrish Kenge as a Group Chief Executive Officer, and with a distinguished career spanning fintech, e-commerce and consumer electronic, Ambrish brings deep expertise in product innovation, digital transformation and business scalping. Prior to joining Angel One, he has served as a Vice President and General Manager at Google Pay APAC. Moving to next, Mahindra Logistics were also in focus, where Board of the Director of the Mahindra Logistics at its meeting held today has approved the investment in the equity shares of MLL Express Service Private Limited, which is a wholly owned subsidiary of the Mahindra Logistics, up to an amount of not exceeding amount rupees 35 crore by way of subscription to right issue by MESPL. Moving to next, Ambuja Cement were also in focus, where company has received the Competition Commission of India approval for acquisition of Orient Cement Limited. And lastly, on back of brokerage note, M&M Financial Services were also in focus, where JP Morgan has come out with their note on M&M Financial Services, where they have maintained their overweight rating with assumed coverage and hiked target price to 320 from 235. They say that the positive ruler momentum will lead to a growth in the company, and JP Morgan expect NIMs to be benefit from favorable rate cycle, improvement in core fee and a positive tractor cycle. They say that the disbursement growth will be aided by the diversification, and upcoming right issue is a key overhang, and its completion will be a near-term clearing event.
Okay, Ravinder, thanks so much for joining us with all of those updates on the stocks that were in the spotlight today. But time now for an ET Now exclusive. HPCL and Tata Motors have inked a partnership for diesel exhaust fluid. Both of these stocks have ended with gains of 3.5% today. My colleague Anjali Palod caught up with Amit Garg, the Director of Marketing at HPCL. Let's go across and listen into what he had to say about the partnerships and the company's plans for retail prices.
Well, it's a very important landmark tie-up, I would say, for both Tata Motors and Hindustan Petroleum. This was one of the products which was easily available in the market, and there was an issue with the customer of getting a very spurious product at times because they were buying from the roadside. Now with this tie-up, what has happened, that Tata Motors have got access to more than 22,000 HPCL outlets, and we can now also reach out to more than 2,000 of their places where they operate from. So the customer has an opportunity to buy this product from 25,000 sales points.
I also want to ask, with now crude prices falling below $71, are we expecting to see any price cuts coming in?
Well, this is something which basically we keep dealing with the prices depending upon the crude, because as you would have heard in the past also, the RSP or the selling price at the retail outlet at the petrol pump is not completely dependent on the crude prices. I mean, it depends on the forex and the time you bought and the source you bought. Yeah. So that is something we will keep calibrating as the need comes. But yes, for I don't see any change right now.
So ethanol blending. Now the government did announce a target for a 20% ethanol blending. So how is the current landscape for that, and how does it impact HPCL particularly?
Yes, so HPCL has been on the forefront of introducing ethanol blended MS in the country, and we have already achieved 19% and more. So the government target which the Honorable Prime Minister gave, so that has been preponed by almost 5 years now.
Yeah. Alright, and with that, completely out of time on this edition of Your Trades on ET Now. Thank you so much for tuning in.